name is Darwin, and I'm chair of the Central and North London regional groups of BCS. And although we've got thousands of members between our groups, especially the three groups you see represented here, a little bit of context for you is that BCS has around 68,000 members spread around the globe. BCS say in 150 countries, but I haven't gone to the trouble of trying to count all of them myself. I believe it. And most of them are digital, technical, and IT professionals. So a huge body of knowledge in terms of IT. As an organization, BCS, which stands for British Computer Society, is a registered charity with a royal charter. It's actually the Chartered Institute for IT. So we've got a great pedigree, and our three groups are quite interesting because two of them, the Central and North London branches, are very well established, and BCS Embrace Group is a newbie. So welcome to everyone who's with BCS Embrace tonight. Our wider community in BCS includes business leaders, such as Suzanne, for example, who we have here, and a number of the other speakers who we have here, who will meet fairly soon. It includes business leaders, educators, practitioners of IT, policymakers, and we influence governments and so on as well. And we're all committed to the BCS mission of making IT good for society. And of course, today's topic, fintech, is very much something that we hope will make IT good for society. Somebody who is going to make this session good for you, I hope, is my colleague and friend Inzube, who I'm going to hand over to you. Over to you, Inzube.
Thank you, Dalim, for that kind introduction. Yes, and a warm welcome to you all, distinguished guests and esteemed keynotes and panel speakers. I'm Unzube Fodike, your host and moderator for the evening. Tonight, I'm particularly excited as we're going to talk about fintech from the incumbents perspective. We have an amazing lineup of speakers who will introduce themselves to you shortly. What we'll go through initially is a keynote address, a panel, Q&A, and then closing remarks. Embrace, which Dalim alluded to, is a new special interest group that is focused on race and ethnicity within the IT industry. The idea is, as a special interest group, we work a lot more racially diverse by supporting the BCS and external initiatives. Our group is open to all members. If you want to get involved or have any ideas for forthcoming events, please drop an email to groups@bcs.uk. I thought it would be worth kind of highlighting my co-conspirators, if you like, that are part of the BCS Embrace. So Charlie, David, Wilfred, Obi, Prasad, Joel, Doreen, and Nicola have been critical with respect to setting up Embrace at BCS. Couldn't have done it without every single one of them. I'm convinced that if dictionary were to make a visual representation of the word fintech, it would look something like this. So Suzanne, our keynote speaker, has been in the sector before it became a sector. She also has written a couple of books on fintech and has a company she's set up with the name Fintech in it as well. So without further ado, I'd like to please invite you to join me and welcome our keynote speaker, Suzanne. Thank you.
Thank you very much, Sensube. And I would like to welcome all of you. Thank you so much for joining us today at this webinar to talk about fintech, about the fintech ecosystem, and about the future of the sector. So it's a very exciting time. I will share my screen now and my slides so that I can talk you through the fintech overview and fintech opportunities. And as Sube said, my name is Suzanne Chisti. I'm the founder and the CEO of Fintech Circle. And I give you a little bit an update on what I do. Just see. I can move to the next page. Yes, here it is. So I invest in fintech companies, in fintech startups. My background, however, has been in banking. So I worked for Morgan Stanley for 7 years, in London and in Hong Kong, for Lloyds, for Deutsche Bank. And before I was working for Accenture, being in systems integration. So I started in Berkeley in the States, when during the MBA program, and then I started to learn coding. So I was learning how to do C++, in developing GUIs, actually, more than 20 years ago. And then I moved into the banking sector, implementing software solutions for banks before I joined Morgan Stanley. Then I moved into the front office in the asset management sector. And from there onwards, I worked in banking. I just want to check, please. This would be perfect. Thank you so much. And then basically I worked in the financial services until 2014 when I launched Fintech Circle. And Fintech Circle has got lots of different hats on. I will share it with you because it explains how the whole industry is structured as well. In addition to being an entrepreneur and investor, I'm also a non-executive director at a UK bank, which is very much about embracing diversity. So what Nsube said, that's very keen to my heart, not only because my own children are biracial. So we've got, I've got my own personal situation where I believe in diversity, in gender diversity, racial diversity, 100% behind it. And I think it's important in fintech because often the fintech sector is not as diverse as it should be, so that we draw really attention to that and make it better in the future. So if you go now to the next page, which gives you an overview of how I structured the business. The initial circle, when you look at the inner circle, is the investor network. And that's really important because if you enter the sector, you might want to enter by starting a fintech startup. As an entrepreneur, as a founding team member, at some stage you need capital to grow your business. So we always say in fintech, capital is like oxygen. You need more cash in order to help you grow and scale up. So that's the center of Fintech Circle, where we invest, and we're a group of high net worth investors, and we invest our own capital in fintech startups. And then we've got a second circle, which is our authors, our thought leaders, our corporate network, our partners, and our wider circle, which is social media. So that's how you can also, learn, follow us on social media across all our social media channels. So if I go to the next page, these are a couple of companies we invested in. And this is interesting because it shows you how diverse the fintech sector is. And it's important to understand, when we look at fintech, we've got different ways of actually analyzing the sector. And I always talk about a cube. It's almost like a fintech cube. So it has got 3 dimensions. One dimension is what is the business the fintech company is in. So the fintech company might be in retail banking, for example, a challenger bank, is in the retail banking sector. It might be a fintech company focused on asset management. Then it would be a wealth tech company. Or it might be on transaction banking, might be in the payment sector, might be in insurance. So we've got all these ways of distinguishing which fintech companies we're looking at. Then we're looking at what type of technology do they use? Do they use AI? Do they use machine learning? Do they use blockchain technologies? And we also look at what type of business model do those companies follow. So this is an example of companies we invested in and where we want to really help them to grow, to the very successful businesses in order to have good exits. So when you have found at some stage you want to be sold to exit, and that's the monetization moment where lots of our founders then become multimillionaires, and where large corporates, and we talk about that later in our panel discussion, what's the strategy of corporates in fintech, and lots of corporates have got I would say a strategy which is focused on multiple things, multiple options. One option is to acquire fintech companies. And that's an option which we've seen, lots of banks do, lots of corporates do, because it allows you to get the know-how, into your organization. So at Crown Agents Bank, for example, where I'm an NED, we acquired a US fintech company, which was very important for us because of the technology we wanted to own. But often it's not necessary to acquire a company. Often it's better to partner with fintech companies and just to license their technology, their solutions. So this might be another opportunity to partner with them. And the third option, of course, is to create fintech companies or fintech business models in-house. And we will learn later what Goldman Sachs did so successfully with Marcus. So these are various options of how large companies deal with the fintech startups. And when I go now to the next slide, you see this big elephant in front of you. And this elephant has got an important role to play, and it has got an orange color. So anybody who knows the European banking sector will know there's a European bank which has got orange as its branding color. This is ING. And I remember I was at a large conference in Amsterdam where the CEO of ING said, we are this big elephant. We are slow. We've got tens of thousands of employees globally, so many branches, so much governance and long decision-making cycles. But we know that the fintech startups are all running behind us. They're chasing us. Some want to compete, others want to collaborate. So what we need to learn as a large organization, we need to learn to run as well. We need to learn to run, we need to be more agile, and we want to be able to work with those startups in the best possible way to really create a win-win situation for both sides. So that's something which we see happening again and again. And I believe that the future of finance is fintech, and therefore it is critically important for large organizations to learn how to work with fintech startups. And that's often is easier said than done, because you often have got the situation where a large organization, which takes months maybe to make a decision in terms of procurement cycles, all of a sudden has got a startup or a scale up on the other hand, where decisions can be made in days or in weeks at the latest. So you've got different expectations in terms of timelines, in terms of working together. And so those things need to be worked out in order to create a successful partnership. And when it comes to acquisitions, for example, it's very important these big elephants don't squeeze and don't kill those small greyhound dogs which they acquire. So that's important, for acquisitions. We've seen it again and again, where large companies, acquire fintech companies, and they don't survive inside the big organization. We also have seen it on purpose by tech giants, who acquire competitive fintech companies or competitive technology players just to stop them, from becoming a threat. So that's also another strategy which often tech giants use to stop companies from becoming too big, but just acquiring them and shutting them down. So there's lots of different strategies which take place. But in terms of fintech startups, anybody who is joining from the fintech startup world, if you want to sell into those big organizations, the key thing is to have senior people with you who have got very deep domain expertise in banking and know how the procurement cycle works, in order to gain this credibility with the procurement team, with internal sponsors, to really get into the organization. So that's really important. It takes often 6 months, 9 months to get there. I wanted to share with you one cover page of Nokia or Forbes, which was a cover page which was, I think it came out in 2006 or 7. It was a long time ago, and you saw Nokia CEO was on this page. I think it was 2007. And he basically was asked, or the title of the story was, "Can anyone catch the cell phone king?" And this is, the story of somebody who is in power, who is at that time was the most important telecoms company in the world, and who misses out that there is competition coming up. And competition normally never is perfect. And at that, for him, you know, the competition was in the phone of in the shape of the iPhone. Apple's iPhone was being launched, and he basically completely ignored this threat that Apple would ever become a competitor to Nokia. And in the interview, in fact, he said that the iPhone is way too expensive, number one. Number two, it doesn't work properly. Then number three, there's nothing to worry about. So that's how you can underestimate upcoming competitive threats. So that's really important that we all watch our own blind spots, you know, in our own companies. And if you work in companies supporting, let's say, the competitive analysis tasks, you know, be mindful what competitors are doing, and also that small competitors can grow very quickly and become very powerful. So if you go to the next page here, oops. This one is Mahatma Gandhi. Mahatma Gandhi I wanted to share because he's one of my, I mean, I told you, I think at the beginning, that my children are half Indian. And of course, that's why I think Mahatma Gandhi is one of our role models also at home. And he said something which actually applies to the fintech sector very well. And he said, you know, first they ignore you, then they laugh at you, then they fight you, and then you win. And you know, and what Mahatma Gandhi said basically applies so well to fintech founders, because often fintech founders find themselves in difficult positions where they have to gain acceptance for their ideas. Often, if their ideas are unusual, you know, they're getting criticized, nobody believes in them, it's hard to raise funding. You know, even the last year during Corona, it's very hard to raise funding because people are tight, you know, with spending money, investing in new companies. So it is difficult, but you have to believe in yourself, and at some stage you will win. And I believe that the fintech sector, you know, is really the future of finance. So it will be a huge opportunity for all entrepreneurs to really gain, you know, very powerful roles. And when I mean entrepreneurs, I also mean intrapreneurs. So intrapreneurs are fintech experts and thought leaders inside organizations. So they are equally important, and they operate inside companies, you know, to help them modernize or lead to digital transformation activities. And of course, we've got experts on our panel today, which are these inside thought leaders and experts, you know, who are responsible for internal transformation, which is equally important than external transformation. So on this page, you know, a little joke, but of course I can't ask you because we can't talk to each other at the moment, but you might have seen this cartoon. It's, you know, who thinks blockchain is the future of banking? Everybody would raise their hands, but if you ask who can explain it, you know, nobody would. So we often see that there's a lack of knowledge, of know-how in the sector. And that's important because, of course, it determines your future career prospects. The more you know about fintech, the better it is in financial services. And that's why we wrote 7 books, you know, on fintech. I have been the co-editor of those books, and I've got a team with me. In fact, you know, the books on the left side are crowdsourced, which basically means we went out to our 200,000 members in our fintech circle community and said, you know, we are writing a book on paytech, for example. We've got about 50 places for the best experts globally to apply for. And these are the topics, it's the table of content, who wants to get a place in this book. You have to apply, you know, with a chapter, and then we choose, as editors, we choose the best contributors to the books. So that's how we crowdsource the books, because we wanted to represent the global knowledge and not just the knowledge from one country or one region, but really globally reflect what's going on. And the latest book is Fintech for Dummies, which was just published a few months ago, a great book, you know, when you want to start out in the fintech sector. So coming to the end of my keynote, I wanted to personalize it for you, either for you if you want to have a career in fintech, or for those of you who hire people in fintech. And the question of this, you know, what does it take to innovate? What personality traits do you need to possess, or do you need to look for when you hire people? And it's a combination of a couple of points. One is to be a risk taker. It's very important when you work in fintech, you need to be able to take risks because you're doing new things which never have been done before. Number two, you have to be a customer empathizer, meaning you have to be able to put yourself into the shoes of your customers to understand what are their pain points, what's important to them, what are they willing to pay for. Very important. Then you should be an idea integrator. So this means you don't need to talk all the time, but you need to listen to your colleagues and try to integrate your ideas together with their ideas and create a joint idea. That's often very difficult for people, but that's what really is important, in order to have powerful ideas, to integrate the ideas of others and come up with the best idea in the organization. You also need to be able to influence people, both on top of you, your bosses, and below you. It's always easy to influence people below you who get paid by you, but much harder to influence people on top of you. But that's an important skill to have. And lastly, a result seeker, meaning you need to get things done. And I remember, in lots of large organizations I worked in, often it was just creating a PowerPoint slide deck was enough. But nowadays, we really want to get more than that done. We want to get results. We want to get new products in the.
Yeah.
I think some people are not on mute, so if everybody could go on mute, thank you. So that's really important, to those 5 things. So if you think about what is the ideal profile, when you want to get hired, when you can tick some of those boxes, you will look great at interviews. And equally, for people who hire, those are the things I check. When I look for people to join various teams in the companies I'm working with, these are the skills I look for in new hires. And so to summarize, I do believe that the people who are crazy enough to think that they can change the world usually do. So you've got here 3 great leaders, in front of us who have changed the world for the better. And they're often at hard times because, their life was not being easy at all. It was hard for them to fight. But you need to be brave, to change the world. And so that's what I encourage all of you. If you want to change the world in finance, join the fintech sector. It's an amazing sector, a great and fun sector to be in, and it won't stop from growing, which is very important because you want to enter at the beginning of your career. Definitely you want to enter a growing sector where your career can blossom, over the next decades. And that's, in summary, what I wanted to share with you. So please feel free to get in touch. My name is Suzanne Chisti. You can join me on Twitter, on LinkedIn. You can follow us on all these social media channels, and Instagram as well. And so please feel free to get in touch. Also the email address if you want to get in touch with our team. And I'm very happy now to listen to our panel discussion and invite Sube back and also our other panelists, and to listen to this amazing panel, which has been prepared for all of you.
Thank you so much, Suzanne. That's an amazing presentation and lots of hooks for us to jump off in the main panel discussion. So thank you.
Thanks very much.
I'd like to invite the panelists to join this session. I'm just going to share my screen, and our colleagues, Sarah, Osaho, Komba, and Adma, if you'd like to turn on your cameras, that'd be great. And my opening question would be, if I can start with Sarah, please, actually, the largest company in the room. If you don't mind giving a brief introduction with an overview of your sort of company's geographical footprints, the main products and services, as well as perhaps your personal responsibilities within the firm, that'd be great.
Yeah, of course, happy to, and thank you so much for inviting me to be here today. My name is Sarah Woodland. I work at Goldman Sachs. I run the consumer and digital finance legal team. So our team covers the Marcus business in the UK, that's Goldman Sachs retail consumer banking arm, and it also covers our transaction banking services. Suzanne mentioned that those are payment services, which in our case are provided to our corporate clients. So, Goldman Sachs is obviously, a huge international organization, huge global footprint, huge sort of diverse range of existing businesses, but it's very new to this space, to the Marcus space, to the retail consumer space. And when we launched Marcus a few years ago, the sort of USP for that was how do we combine 150 years of institutional risk management, which we have in our Goldman Sachs investment bank, with the startup fintech mentality that we want to have and we want to nurture and we want to keep within Marcus? And it's a really difficult balance trying to get the best of both worlds. But I think the reason that Marcus has been so successful is because it's been able to combine those two and really grow the business in a successful way on the basis of that platform. Just by way of introduction as well, just more generally, so that's my sort of day job, but I'm also very focused on diversity within Goldman Sachs as well. I lead one of our women's networks within the firm, and I'm also part of the diversity forum within our legal division.
Brilliant, thank you so much. We might move slightly east to Zambia in the meantime. We'll come back to you, Sahar, if that's okay. I suspect you're something else in technical issues. So Komba, please, if you don't mind giving a brief introduction, please.
Hi, Zubi, and the rest of our joiners today. I hope I'm audible, Zubi.
Yes, we can hear and see you. Thank you.
Oh, fantastic. Okay, yeah, so my name is Komba Maluktila. I am the Managing Director for Fintech here in Zambia for MTN. For those of you who do not know MTN, MTN is Africa's #1 largest telecoms provider. We operate in over 20 markets across the continent, but really was a traditional telecoms business MNO up until about 10 years ago, when we realized that, mainstream telecoms business was not really going to propel us to the next level. And we stepped into the financial payment space, which was really just mobile money, and leveraging this huge base, trying to mine this huge base that we had built on GSM, and see how we can enable financial transactions. As the business has evolved over the last decade or so, the need to go full-blown fintech was inevitable. And so we started to build on advanced services and just see how we could now take payments to the next level with remittance, payments of bills, and so on and so forth. We know the rest of the world is not very acclimatized to being able to do full-on transactions on your mobile device. But this was the only way that we could get Africa financially included. And if I were to describe fintech for Africa in one word at the moment, is really leapfrogging, because in the last 1 year, we've had to do a whole lot that we had probably planned to do over the next 5 to 10 years or so. So I'll be sharing some of those stories. I really come from a technology background, sort of gone mainstream commercial. So I've got the opportunity to tell the story from both sides. I'm excited to share the panel with my fellow panelists. And yeah, let's discuss and share ideas. But thanks so much for having me.
Thank you. So from a large incumbent investment bank to a large incumbent telco, we'll come back to the UK. Admire, do you mind introducing yourself, please?
Hi, my name is Admire Mudangwe. I am a founder at EB Capital Ventures. It's quite a new outfit, having spent over 10 years within the investment banking space, of which the 10 years I was at JPMorgan, helping drive the digital and innovation agenda for them. So my EB Capital Ventures, what we do is that we do help incumbents develop their digital propositions and innovation, and also startups that are looking to achieve product market fit, and also trying to collaborate and work with fintech, with the incumbents. So we see ourselves as a sort of a venture builder, and I'm looking forward to the conversation.
Thank you. And last but not least, to Africa, Osaho, do you mind introducing yourself, please?
Thank you, Nzube. Good evening, everyone. It's a pleasure to be here. My name is Chukuma Osahor, and I lead digital partnerships at Access Bank. Access Bank is proudly Africa's largest bank by retail customers, and we operate a network of over 600 branches in Nigeria and in 12 countries. Our sub-Saharan footprint is very strong and expanding and spanning across 3 continents. Our vision is to be the world's most respected African bank. And at Digital Partnerships, we basically help customers succeed with technology. We work with them to ideate and co-create technology solutions for their businesses, leveraging on our strong digital capabilities. So more like what Admire does, more from a banking perspective. It's truly a privilege to be here and an honor to be on the panel with such great minds in technology. I truly celebrate everyone on this panel and all you've achieved in technology in your various countries and continents. Good to be here.
Thank you, and it's great to have you on here as well. So I'll start with a few questions, but if anyone in the audience has questions they would like to share, please feel free to type it into the comments box. We've got the hashtag for the event as well. You can use social media and we'll pick these questions up and address the panel. So to kick off, obviously the macro situation over the last 12 months has been unprecedented. So for each of your respective companies, how has growth and innovation been impacted? And how do elements of your business, for example, consumer trust as an incumbent, ride out situations like the current climate we have? If Adma would like to go first, or?
So I think this pandemic has been a blessing in a way. Well, yes, we know that we've lost a lot of lives, but from a digital innovation acceleration point of view, I think it has proved that the analog model doesn't work, and it has forced companies to accelerate their digital capabilities. Those that were a little bit, shy, as it were, and not focusing on it, so they have been forced to fully go digital. And obviously, it has come in with a lot of risks, particularly from a cybersecurity point of view. But I think I've seen a lot of payments growth from the current work that I'm doing. And I think there's much more even from, I think there's a lot of more startups actually that have been in this current environment.
Thank you.
From my perspective, it's obviously been, an extremely challenging, difficult year for so many reasons. And one of the things that Marcus tries to do when it makes all of its decisions is to put the customer at the center and think about, how can we provide the best value, transparency, and sort of safe service to customers. And one of the focuses that we've noticed, before the pandemic, but also now particularly, a year into it, is a focus by the regulators on vulnerable customers and thinking about vulnerability generally, and also vulnerability linked with the pandemic, and how fintechs can be helpful. Are there ways that we can adapt the services that we provide such that they are more accessible to a broader base of customers? When we think about how we position our products, do we think that they are suitable for the broadest range of customers so that they can have access to those products? And actually, so that's one consideration. And then the other consideration was, I guess, a year ago coming into this, the growth in deposits in both our transaction banking business, so on the corporate side, but then also in the retail space on the Marcus side, was absolutely huge. There was a flight to cash as people came out of their investments with the extreme market volatility this time last year. And also, for people who were lucky enough to have their jobs, they're not spending any money. Obviously, they're saving more money. That was really, a key driver of growth in our deposit base. So thinking about how do we continue to provide value value to those customers? How do we make sure that we are making our product accessible to the broadest range of customers has been something which we've been focused on, obviously, since launch, but the past year has really focused minds on those topics.
Thank you, Sarah. Osahar Komba, would you like to add to that?
Oh, okay. I think, yeah, just like Sarah said, and same with Admire. So it's quite a coincidence. So if you probably Google Access Bank's annual report for the year 2020, those two words, they form the theme of the 2020 annual report. So the theme of our 2020 annual report was driving sustainable growth through technology. So innovation was critical to help us drive growth in a year where the pandemic affected the way businesses operate, and of course, you know, so people had to go home, people had to start working from home, and it had to take a whole lot of innovation and technology to keep providing uninterrupted services for our customers. And so, yes, those two words played a very significant role in our business. It affected not just one or a few parts of the business. Basically, those two things basically drove 2020 as you see in our financial report. So we relied heavily on robust technology to continue to deliver uninterrupted service to our customers.
Thank you. And Komba?
Yeah, thanks, Toby. So, you know, I like to really paint a picture with Africa, right? And what fintech is really doing for us, and what the last 1 year has been like. The fact is, we did not waste the pandemic. I think that the pandemic did really help accelerate financial and digital transactions as a whole. But we are looking at it from a perspective of today, we have a lot of Africans who are financially excluded, and they cannot access basic services such as utilities, just clean water, electricity, because they do not have access to pay for these services. And they find themselves traveling miles and miles to be able to make financial transactions because they're excluded financially. And what Fintech has done, and with the penetration of more and more low cost to medium devices, is with a mobile phone, you are automatically banked. And that's where the saving grace has come with where Fintech is concerned. And just to give you some statistics, ending last year, we have now almost over 150 million Africans now utilizing a mobile phone and a bank account instantly, and they're able to participate in financial transactions. So the impact that Fintech has in Africa alone is revolutionary. We are bigger than Southeast Asia, which has got a Fintech population of just over 50 million. And so the center of the world when it comes to Fintech really is in Africa. Here is where you're going to be able to really test some really powerful use cases. And I'll get into it in a little bit more detail, but I'd just like for the listeners to really share your questions, your curiosity of how Fintech is really impacting Africa. It's different, and I keep on emphasizing on it because we don't have well-penetrated banking services. There are many areas, over 60% of our population is completely unbanked. Imagine no banking transactions at all. And now at the hand of a mobile phone, you can literally transact as mature a market as anyone living in Silicon Valley. And that's what I mean when we say we have leapfrogged a lot of the things that we almost could not do even just a year ago, suddenly now. So that would be my 2 cents in terms of what has happened in the last year or so.
Indeed, and thank you so much for sharing that. I agree that telco is quite a different animal in Africa. So across the continent, the M-Pesas of this world and several others have disrupted. I work for a Spanish telco here in London, and even the footprint of that telco is very different from what obtains in different countries on the continent. And while we've got you, I don't know if you can quickly comment on on how the incumbent payment infrastructure meets the growing fintech needs and demand, given the recent spikes in consumer activity. Because there's a lot that's going on, and if partnering with fintechs, the payment infrastructure that's built for a certain number of people is now going to have to scale. I don't know if you have any comments on that based on the MTN Fintech Zambia view.
Yeah, thanks for that question, Zoe. So I'm going to describe it very much at the grassroots. Look, a lot of investment is going into it, a lot. I'll narrow it down to the Zambian context, right? So Zambian population density is generally very low. So it takes quite a distance before you see the next civilized town, and makes the model very expensive to run. For fintech to be successful, you need agency banking. So you need to deploy booths. So when you drive around in most African countries that are running fintech models, you're going to see small little retail shops that allow you to be able to conveniently deposit money into your account, effectively converting cash into e-money to then enable fintech transactions to be possible. And one of the things that we are really dealing with at the grassroots is trust. I mean, people have dealt with cash all their lives, all right? So imagine my grandmother is 80 years old. For 80 years, she's dealt with cash. She doesn't even have a bank account, and she lives in a village up country. And to convince her now to take the cash that she's gotten so accustomed to keeping under her mattress, to move it under the mattress into a mobile phone and guarantee her that it will be the same cash that she's been seeing for the last 80 years under her mattress in a mobile phone, you have to make sure that should she need to withdraw it for any reason, that there should be a booth right outside her doorstep to enable convert that e-money into cash for any reason she might need to, or to be able to deposit that money safely into e-money, and then to enable the transactions. So she must be able at her doorstep, at the click of a finger, to be able to carry out financial transactions. She'll pay for bills, buy goods and services. That means you now need a merchant ecosystem for merchants to be able to accept e-payments. And so all that requires quite a bit of investment. And the base is growing at least 50% year on year across our footprint, an average of 50% year on year across our footprint. So it's very rapid growth. What we saw with M-Pesa in the last 5 years is pretty much being replicated across Africa. And so that requires a lot of investment in terms of CapEx, a lot of investment in terms of people, because fintech is such a new phenomenon. I can count on one hand how many higher learning institutions are even offering it as a program. So to just get the right kind of expertise, to translate the APIs, to onboard partners who then offer these services, retail services, e-commerce services, is what we are really dealing with at the grassroots. So it's interesting, it's exciting, it's pretty fast. It's not a full-fledged bank, and it's not an MNO. So it's right there in between. So it's very practical stuff at the grassroots that we're dealing between talent and investing infrastructure. Last year alone in Zambia, we invested slightly over $5 million in just the distribution network, expanding the distribution network alone. And so it's quite an expensive model to run, but with very immense benefits. I'll get into what the regulatory framework is looking like in a short while. I won't preempt the latter discussion, but it's all very exciting stuff and just a lot of promising stuff that's happening on the continent right now.
Thank you, Komba. And if we come back to London, you can see that whole dynamism and energy that's involved in the telco space in Africa, and that energy that's required within sort of fintechs and startups. If I can ask you, Sarah, as a large incumbent, how can you maintain being disruptive by combining the benefits that come with, your established market share and dominance with the startup mentality and energy. You touched on it a little bit in your opening remarks, but if you can expand on that, that'd be great.
Yeah, no, I think it's a really difficult balance. The sort of, I guess, red tape, frankly, the bureaucracy that comes with working in, a global financial institution, sort of death by 1,000 committees, decision making being occasionally it's quick, but frequently it has to go through many committees and takes many weeks. And it's making sure that which is sometimes a bit painful, as I think we would all acknowledge, but actually it's all there for the right reason, and it all needs to be done. Trying to balance that out with as you say, the startup mentality, and making sure that creativity and that dynamism and that push forward, which you need to launch these new businesses from scratch, continues to be nurtured and developed. So I by no means would say that we get it right all the time. Startups, I guess, they're probably living from moment to moment in terms of cash, which obviously something like Marcus within the ecosystem of Goldman Sachs doesn't have to worry about, but we still have arguments about engineering resource day in, day out, and how we're going to build stuff and how that's going to be applied and what the priorities are. So but by no means is it straightforward, but I think that's the balance. And then just thinking about what Komba was talking about in terms of partnerships, and I guess also part of the change in the way that a lot of retailers have moved to online operations over the past year, or have increased their online presence. One of the things that we've been quite focused on the transaction banking side is how can we use the cloud-based technology which we've created as part of that business to power those other payment platforms, which are then used by those small businesses, or those market stall owners, or those sole traders. We announced a partnership at the end of last year with Stripe, one of those payment platforms, and I think that model of using our technology to provide other payment platforms in order to get down to those much smaller end users will be one where we continue to focus a lot of our attention.
Great. Thank you for that. And in terms of partnerships, I'll come back to you, Admire, in a second, but Goldman's is quite a model at setting up partnerships, obviously funding quite a few startups, becoming financial partners to startups like Neighbor. And even last week, I saw a couple of more recent partnerships that were announced. There was a 27 million credit line for a Brazilian fintech, and also a 50 million pound partnership with Starling. So the question is to you, Admire. So looking at incumbents, in your view, how do you think the UK incumbents that are approaching partnerships can apply their strengths to make such a partnership work, and also to use that to approach or break into specific segments or demographics they don't have access to?
That's a very good question. So in my experience, I've seen sort of a four-part strategy in terms of how incumbents are collaborating with the fintechs. And the thing to think about is that if you really want to democratize your service offering, you need to think of what I'll call open innovation or crowd-based innovation, and not just to be pigeonholed to what you do, but being willing to go out into the market and see. So with that in mind, I've seen, firms having incubators. I was at JPMorgan, we had the in-resident program. So we would have fintechs coming in, and we will, so because for most of these fintechs, they have got an idea of problems that they want to solve, but they don't understand the complexity. They don't have access to the data and to real use cases that they can deploy. So by having them joining an incubator, you give them access to data and real life problems to solve. So that's one way of doing it. You power them up. They come there for 18 months, 12 months, whatever period it is. Give them a use case to deal with. They solve it. If the business likes it, then it's then rolled out in the firm. Either the firm will then decide to invest directly, to make a direct investment or co-investment, or it becomes then the startup becomes a vendor. The second element is just around acceleration, similar to what Access Bank and Chukuma does. That you have an accelerator program, you have startups come in, open them to the rest of the ecosystem. In London here, you've got Barclays, the RAISE program that they run. So that's another way of doing it. And by opening that up, you're allowing a lot of talent to come in, and you're democratizing and achieving the inclusivity that you also require. The third element is actually around collaborating with existing accelerators. Again, I was part of the Accenture Fintech Innovation Lab. And in there, I know that the Goldman Sachs, literally all the banks in the country and other incumbents, they are part of that whole program. And you have got a lot of startups that are coming in, then they get support from these incumbents. Again, using the similar model that I did explain. So to answer your question in terms of how inclusivity can be achieved in diversity is really by pushing for what I'll call open innovation, going out there and talking to different customers and fintechs. And also the other thing is to look really carefully at your customer profile. Your customer profile should also then influence the types of partners or fintechs that you work with. Ultimately, I think that's how I would say it. It's kind of like a mixed bag. But one other thing though that I've not seen firms doing quite well. There's a lot of talk about it, but harnessing the internal talent to actually innovate within. Because your employees are typically your first customers, as it were. I think a lot of more attention should be placed there. A lot of investment should go towards that internal crowd innovation, as it were.
Brilliant, thank you. I know we're running close to time, but you talked about partnerships, Admiral. So I'll move on to Osaho, who you alluded to in terms of the African Fintech Foundry, which is Access Bank's Fintech Innovation Hub. If you don't mind, I know when we had the briefing session, you very eloquently described the ways companies can work with and partner with Access Bank. If you're able to share some of those for the audience, that would be great.
Okay, for us, while there's a whole disruption going on in the market, we're always happy as a bank to partner with fintechs who are providing innovative solutions for the market. A lot of fintechs are coming out with awesome solutions that are solving real problems, financial inclusion problems, health accessibility problems. And as a bank, our goal is to have strong partnerships with these fintechs. And so what I shared with you was that, yeah, the Fintech Foundry is the initiative of Access Bank to nurture these fintechs and startups and help them to be able to deliver those solutions to the market. And as these fintechs come to maturity, they are introduced to the bank. And so that's the team I head, which is the digital partnership team. So we are then able to work with them, these mature startups, or the guys who have come from the accelerator program, to help them basically succeed in their business by providing those capabilities. So that's just a summary.
Brilliant, thank you. So real quick, just 30 seconds for each member of the panel. If you had a crystal ball, and we all know what forecasting has been like the last year or two, what would you say the future looks like for incumbents versus fintechs in terms of future propositions and partnerships? And if we start with Komba, and perhaps you could lead with a conversation around how regulators might be able to support or impact the ecosystem. That'd be great, thank you.
Okay, happy to take lead on this one. So regulators play such a pivotal role, but obviously it's a new space. So even they're acclimatizing on the do's and don'ts, etc., etc. But what I would say is we need to work extremely close with the regulators and bring them up to speed with what the trends are out there, because they play such a pivotal role and are such enablers to the fintech ecosystem. I'll give you an example of when the pandemic broke last year and how I saw regulators across the continent collaborate and see just what they could do to enable more digital transactions, more financial inclusion, because countries would be going into lockdown and there was so much uncertainty. One of the first things that they did, and specifically in Zambia, was increase the limits of transactions that would be able to be carried out on your mobile phone. So these were almost tripled. And beyond that, we worked together with them to zero rate transaction fees to enable more people come online and to make these services affordable. One MNO would have not been able to do that, especially in the competitive market that we operate in. And we literally came together. It was the banking sector, the fintechs, the PSPs, and just sit around the table and say, look, guys, what can we do to make digital transaction easier and digital transaction penetration a whole lot more quicker during this pandemic? And we all came together and a lot happened, and it's testament to the growth that we saw of over 60% growth in transactions and as well as the base. And so the regulator is more or less like a conduit for all of us. And I don't see a lot of competition happening amongst fintechs, be it the startups, incumbents, the smaller organizations. It's the combination of businesses and people coming together to operate together to allow for a whole lot more digital financial inclusion. Once the customer, the consumer is included, then you can compete. But right now, it's a race to the wallet. It's all about inclusion and enabling a whole lot more consumers and giving them a differentiated customer experience and so on and so forth. In another 3 to 5 years, we can see what the competitive landscape would look like. For now, it's a whole lot more around how do we work together to enable Africans and the world at large. That's what I would say.
Thank you. Sarah, 30 seconds, please. Crystal ball.
30 seconds. I do not have a good crystal ball, but very sort of specifically to GS, our focus is really going to be on investments and how do we bring the investment expertise that we currently provide to companies and to high net worth individuals to a mass retail audience and provide them better value investment products. So that's our next area of focus.
Thank you. Admire, please.
So I would say two things, right? The first thing is that I think startups and incumbents, when we're in together, it's no longer them against us, but it's one collaborated focus. And in terms of a crystal ball, there has been a lot of consumer-first innovation of fintechs. I think the biggest gap that exists out there now is actually in the enterprise technology space, and banks have got huge problems that they don't know how to solve. And if there's any, fintech founders out there, that's space that you guys need to look at.
Thank you. And to Africa's largest bank, Osaho, 30 seconds.
Yeah, the world's most respected African bank. Yeah, so I'll just write off from what Admire said. It's no more them versus us, it's collaboration. And so for us, crystal ball into the future is that we'll keep collaborating. Fintech is helping to solve major issues. Financial inclusion issues are being solved by fintech. So it's a win-win for the world. We will support and collaborate with them to solve issues. It's all about just building a strong, sustainable society at the end of the day. So whatever collaborations will help us achieve a better world, a more inclusive world, that's the crystal ball we all look for.
Thank you so much, Osahor. It's been brilliant, all of your contributions to the panel. It's great to get the mobile network operators' perspective, large investment banking, large retail banking, consumer banking. So thank you so much. I'll hand over to my colleague, David, for closing remarks. Thank you.
Closing remarks. It was a great panel. Aren't we so lucky to have such an intelligent and well-informed group brought together, and such an international audience, as well as an international panel to match it. I used to always think that the center of fintech was the Old Street roundabout, but now I'm told it's somewhere in Africa. So I'm going to have to open my eyes and share my focus. We talk about, I think I'm sharing some of Susanna's slides, which in fact she edited slightly before she delivered it. So I'd like to thank her, obviously, as a keynote for giving me some ideas, which I'd like to take forward. I thought the brilliant one is the one about oxygen and how we all need oxygen in order to survive. I mean, it's quite a remarkable day. It's a day when we've discovered how to make oxygen on Mars. So how fantastic, you know, we're just about learning how to make oxygen to make ourselves survive as fintechs in this world. And now we're looking at other planets where we're making oxygen. There was another one that Suzanne brought up, which was that only the most adaptable will survive. It's not the strongest, it's not the one with the most money. It's the one that has the ability to change and actually not just to follow, but to leapfrog with ideas. So you don't simply replicate what you already know. You have to have literally, as Sarah said, the crystal ball. You know, this is the key. You have to have some sort of vision. And as a specialist in banking consultancy myself, you know, trying to make sure that you tie together the strategy for all the different elements that you're trying to do as an incumbent. Have you thought through all the elements of your strategy, and are you tying together your production line into that strategy? Let's make sure that we're doing that. I think we're really very grateful to the speakers. We're very grateful to everybody who's joined us tonight. Can I just thank them, because without an audience, we are just wasting our time. And for those of you who are new to the BCS Embrace group, I know Nzubi would want me to emphasize that the diversity side of what we're trying to do is something that IT has been a bit late picking up on, to be quite frank. And whether it be gender diversity or racial diversity, if you're a BCS member, you need to go back into your membership options and select to be a member of BCS Embrace. We need a voice. And the only way we can really have a voice is if you all join us together. There was a great comment also about democratization of financial services and making sure that everybody has access to financial services. We're trying to do the same thing. That fits in perfectly with the Embrace methodology, the Embrace theory. We want everyone to be part of the same family. So that's what we're trying to work together. Thank you for your time tonight. I hope you've all enjoyed it. Please give a warm physical or mental applause to our panel. And I look forward to meeting with you all in person in the near future. Inshallah, God willing, we'll be there. Thank you for your time today. Thank you, especially Suzanne, for your keynote. Thank you.
Thank you very much. Thank you.